Hello dear crypto friends, and welcome to today's video in which we are again taking a closer look at the famous expanded flat scenario. So the idea that we are now doing an expanded flat correction and that this whole pump after 2020 and subsequent dump has just been an expanded flat correction. Could we still be in an expanded flat correction for Bitcoin and also for the entire crypto market? Or has this scenario been invalidated? And what would need to happen for such a scenario to unfold? Let's start, friends. And you can see that I have loaded the Bitcoin chart. So the expanded flat idea is basically the idea that this bizarre structure here that reminds me of the back of a dinosaur or something like this, right? That this whole structure here has been an expanded flat correction. So how would that look? So this would in theory mean that this was an A, B, C type of correction, right? And B is higher than this peak here, C is lower than this low here. We can go here on this page. It explains it very nicely, Elliott wave forecast. And here's a picture that visualizes how such an expanded flat correction would look. Now, there are a few things that need to be fulfilled and we are getting right to that. But first, we need to count the subwaves, right? Because we have subwaves here. So there's like A, B, C. Then there's another A, B, C. And then there's a 5-wave move down, and that is really important now. There's a 5-wave move down. So this BC wave here is composed of 5 waves down. So maybe 1, 2, 3, 4, 5, okay? So that would be the structure. And then we see that afterwards, what happens afterwards, meaning it's an expanded flat correction, well, afterwards we get a pump. So this whole thing here, okay, this whole thing here has just been part of wave 1, 2, 3, 4, 5 of wave 4 of a much bigger move, and that wave 5 of this whole structure here is imminent, and that we would go directly from here into a new pump. Now that is of course an idea we understandably all like quite a lot, right? That is quite clear. So this would mean we would get now directly from here into a new rally, which would last from now until early next year, sometime early next year. And we see that the upper resistance line of this trend channel says we could go as high as, for example, 135,000 or almost 140,000 by March 2023. So this would be such an expanded flat kind of scenario. And of course, we now would like to know, is this scenario still valid, or has Bitcoin actually invalidated this scenario? And for that, we go to this site here, and here it is explained that wave C needs to be a 5-wave structure and ideally hold RSI divergence between wave 3 and wave 5 at completion. So RSI divergence would be nice between wave 3 and wave 5. So that means that ideally we should have here some kind of divergence going on. Here we have a lower low in the price, and we also have a lower low in the RSI. So I don't see a big strong bullish divergence going on here, to be honest. However, what we can see is that there's a hidden bullish divergence between wave 1 and wave 5. We have lower lows here in the price, and if we zoom into the RSI, we can see that the RSI here is a bit higher, like a slight bit higher than it was in January 22 when this wave 1 was started. So this might still work out. Common areas for completion of wave C lie at 100% and 123.6% extension of wave A projected from the end of wave B, with invalidation being beyond the 161.8% extension. So what does that mean, friends? Let us go into the Fib levels. Let us use our beautiful Fibonacci levels, and for that I think it would be wise to remove all these drawings here. So we take the distance of this wave here, okay, this wave AB, right? This wave here. So like this. And that means basically Bitcoin is now between the 0.236 fib extension and the 0.618 fib extension. That is where Bitcoin is right now. And we would have, as it said here, an invalidation beyond the 0.618 fib extension. So beyond this extension, if we would now go below 16,500, it's currently sitting at 16,500. If we would go below this point, the expanded flat scenario for Bitcoin would be invalidated. This is quite interesting. So we're not so far away anymore from an invalidation, but technically, quite astoundingly and unexpectedly, the whole structure here could still be an expanded flat correction. That is fascinating, because we would have thought the correction was so crazy and insane that it's basically over. It's like game over. But in theory, we could still unexpectedly go from here directly into an insane pump that nobody is expecting. Now, if we go to the total market cap, so Bitcoin and all altcoins, interestingly, the structure looks much more bullish. First of all, here in this structure, we did not dip below the previous peak, but we hit exactly the peak from back in January 2018. Now, of course, here we could have the exact same ABC type expanded flat structure, right? And here in the end, we have this 1, 2, 3, 4, 5 wave structure, right? So we would like to know how is it looking here with the Fibonacci extensions. And we go in here, and then we see interestingly that the total market cap is looking much better than only Bitcoin, because it is currently resting comfortably at the 1.236 Fibonacci extension. And it says here that typical targets of wave C lie around the 123.6% extension, so at the 1.236 extension, which would be quite in line with what typical expanded flat corrections look like. And we see that the total market cap, here the 0.618 extension below which the expanded flat would be invalidated, is actually quite far away. So the total market cap, fascinatingly, is looking a lot more bullish than only Bitcoin. Now, do we have a bullish divergence here somewhere? Well, we actually do have a bullish divergence, which is a bit stronger than the one of Bitcoin. Now, again, it's not technically a bullish divergence between wave 3 and 5, because here we have lower lows in the price and also lower lows in the RSI. So technically it's not an awesome hidden bullish divergence or something. However, between wave 1 and wave 5, we do have quite a hidden bullish divergence, which is stronger than the one in Bitcoin. It is a slight one, but it is stronger than the one in Bitcoin. The low here in June 22 is higher than the low here in January 22 in the RSI. So this means we are having a quite good hidden bullish divergence. So I would say it's looking still quite good. We still, if we are lucky, could actually be in an expanded flat correction. And this would mean, friends, well, this would mean that from here on, we go unexpectedly at some point into a brutal rally, which would last anywhere from 6 to 12 months. I suspect this would be quite sudden, quite unexpected, and quite fast, because it would take everybody by surprise, right? Everyone is super bearish now. Everybody thinks we will just go lower and lower and lower because we're going to a recession, because the stock market is plunging. So this would be quite the unexpected and brutal move that I think nobody, like almost nobody, is expecting something like this. Everyone thinks like this is completely out of the question now. This is like completely invalidated. But we see that actually this has not been invalidated yet. The total market cap would need to drop quite a bit more down to below the 0.618 extension, which is at 614 billion market cap, and we are now at 841. So this thing would need to drop still a bit more to invalidate the whole idea. But of course, we know that this will depend on the performance of the stock market, right? So if we go into the Nasdaq or the S&P 500, it is really very analogous. So if we look here at this falling wedge of the Nasdaq, we see that a falling wedge structure normally is a bullish structure. We have said quite a few times that we have printed a very strong hidden bullish divergence in the Nasdaq, lower lows here in the price, higher lows in the RSI. So quite a strong one, and this is a bullish structure, this falling wedge. So it is not unreasonable to assume that, for example, now on the 13th of July, when the next CPI data is being released and inflation will be a lot lower than everybody thinks, it is not unreasonable to assume that out of a sudden we go into an unexpected rally. And if that happens, friends, then this would be an ideal scenario for the crypto market to go into this wave 5, into this brutal pump that nobody is expecting, because everybody's super bearish now. We are in extreme fear and have been all the time in extreme fear since weeks, since over a month now, as we can see. And we are at extreme fear for such a long time, and we're seeing fear levels that are unprecedented since such a long time. So normally this extreme desperation and extreme fear normally happens at market lows, okay? That's why I still haven't kind of given up on the contrarian view that it would be just too easy. I'm just quite surprised that everyone is bearish now. Like, everyone you ask is bearish, and of course we're going down much lower. The Nasdaq will fall to, I don't know, 6,000 points. The S&P 500 will fall to 3,000 or even below 3,000 points. Everyone is super bearish. I would be so surprised if this really happens like everybody thinks. And we should also keep in mind, commodity prices have started to fall, and this is also reflected in the 2-year yields, and also, by the way, in the 5-year, 10-year yields, and so on and so forth. So we have gone through this resistance line, this historic resistance line in the yields, and now we have also printed a pretty strong bearish divergence in the 2-year government bond yields. So this here could have been a fake out, and if the yields start dropping and rolling over, then of course this is a strong sign for the Fed not to tighten as aggressively anymore, because a lot of their tightening data comes from the government bond yields. And if the government bond yields start falling, they will not tighten as aggressively anymore and might even reverse. This is the famous pivot scenarios. Commodities have started falling, copper falling, silver falling, gold is falling, and even oil has started somewhat correcting. It is still not dropping a lot, but we have said that also oil is seeing a strong bearish divergence, friends. So it is only a matter of time until oil will also fall. And then of course this will be super good for inflation. Inflation will come down, and now the US is actually nearing a recession. So suddenly the mandate of the Fed has to go from we have to combat inflation to we have to combat the recession. We are crashing the entire market. So I think the CPI reading on July 13th will say inflation is lower than expected, and that will of course lead to huge pumps in the S&P 500 and the Nasdaq. And so it is quite likely that the Fed will at some point pivot. They might still raise interest rates in July, but I strongly suspect that they will not raise the interest rates anymore in September. And that would be of course a super bullish scenario. So the first pump would be at the CPI reading in July, and then of course they would maybe raise the interest rate still. And then the second big surprise would come at the Fed meeting in late September, when they suddenly announce that, oh guys, we will not raise the interest rates further. And then this could be the pump that we are all waiting for, friends. So this would need to happen. This would be the scenario that we would need to happen for Bitcoin and for the crypto market to pump, and for this ABC type scenario to play out as an expanded flat, and for us to do an unexpectedly brutal pump that really no one is expecting right now. And this would be maximum pain, maximum pain for most people that were now super fearful and sold here, sold into this dump, were super panicky, sold their coins, and this would be maximum pain now for many people. And if we learn something, it is that coins are always doing stuff that is maximum pain for the most amount of people, okay? Maximum pain for the highest amount of people. That is the likeliest course of action that coins are normally taking. So we will have to wait, see what the inflation data will say on the 13th of July and what the Fed is going to do in their next FOMC meetings. So we will have to wait and see what will happen in the next meetings. And we see that the market prices in an 82% probability right now for a 75 basis point hike in July. And as we can see for September, the market prices in also rate hikes. And there's not one single scenario here for the market where we say that the Fed is not raising anymore. And I think, honestly, I think the market is wrong here. And I think the Fed will have to pivot at some point later this year, else they would brutally crush the entire US economy. They will cause a brutal recession, and I think they will pivot at the latest for the meeting on the 21st of September. And the market, as you can see, is not pricing this in at all, like not at all. And what will happen, of course, then is a huge pump in the stock market. And this would be the scenario that we would need, friends, for our expanded flat scenario to take place and for crypto and coins to pump unexpectedly until early 2023. This would be the scenario that we would need. So it is interesting to see that the expanded flat scenario is not technically ruled out yet. It could still happen even though the prices dropped so low. This is important to understand. And this, of course, will depend on what the Fed will be doing and on inflation data. So you see how very interconnected everything is, okay? It is super interconnected. And that's why if we want to understand Bitcoin and the crypto market in its entirety, we have to understand stocks, we have to understand the stock market and the economical dynamics behind the stock market, government bond yields, inflation, and so on and so forth, Fed rate hikes. So this is why I'm doing daily updates and why I'm watching the market, many different aspects of the market, and I will continue to do so on a daily basis. So I would be happy if you would like this video and would subscribe to this channel so that we can find out together what this crazy market is going to do, friends. So don't despair, because you see that even now an expanded flat scenario is still possible. Of course, as always, no guarantee, friends, no guarantee for anything. I also cannot foresee the future, unfortunately. So then, friends, have a nice day and see you in the next crypto video tomorrow. Bye!